It's your lucky day! The government wants to give you free money! What's up everybody, I am Jaspreet Singh and welcome to the Minority Mindset. If you are a citizen of the United States, the government wants to give you free money to help combat this economic slowdown. Although this money is not exactly free, but I'll get to that in just a little bit. If you are a single taxpayer and you made less than $75,000 in 2018, the plan is for you to get a couple of $1,200 checks. If you made between $75,000 and $99,000 in 2018, you will get a little bit less. If you made more than $99,000 in 2018, well, you're not going to get anything. There's nothing you have to do to get this money. If you are an American citizen and you filed your tax return in 2018, the United States government is going to go through that and see how much money you made, and they're just going to send you a check. So you don't have to apply for anything. It's just going to come into your mailbox or be deposited into your bank account. We don't know exactly yet, but most likely it's going to be a paper check. If you are married, just double the numbers. If you made less than $150,000 in 2018 as a married couple, you will get $2,400. And it's completely phased out after $198,000. So if you made more than $198,000, you get a big fat zero. And as an added bonus, if you have kids, you are eligible for another $500 per kid. It's about time my kids did something useful. But before you cash your check at the Gucci store, you need to understand the hidden cost of your stimulus check. And two, you need to know how to use this check the right way, because if you don't use it the right way, it is going to cost you more than you think. So make sure you watch this video until the end, because I'm going to show you how to use your free money the right way. But before we get into that, hit that thumbs up button below, because if you don't, then YouTube doesn't show our video to anybody else. And subscribe to the Minority Mindset YouTube channel. That way you don't miss our new financial education videos every single week. And hit that little notification bell too, because if you don't, then YouTube's not going to let you know when the new videos are released. Your $1,000 checks are part of a bigger $1 trillion stimulus package created by our government to help stimulate the economy and take care of people so everybody doesn't go bankrupt and run out of money. And the way that $1 trillion are divided is like this. $50 billion of the stimulus package is an assistance program, but let's call it what it is, a bailout for the airline industry. $150 billion of the stimulus package is another assistance program, which is code words for bailout for other hardly affected industries, which includes cruises, hotels, casinos, and shopping mall operators. $300 billion is going towards these short-term business loans for small businesses. That way these small businesses can stay afloat until they can go and arrange financing from somewhere else. About $499 billion are going towards these checks, which you're going to be getting. And then you have about another $1 billion going towards food for low-income people or people that are hardly hit by this virus and economic slowdown. Majority of people think that they're getting a free $1,000 check, but nothing in life is free. This stimulus plan actually comes at a very high cost. And to really understand this cost, you need to know where these $1 trillion are coming from. Wait, isn't the government giving us the $1 trillion? Yes, you're right, except the government doesn't have any money. Remember, the government is not a for-profit entity. They get their money from taxes. So good thing they have a bunch of tax dollars they can give away, except they actually don't have enough tax dollars to cover their regular expenses. In 2019, the government spent $984 billion, with a B, $984 billion more than they brought in from taxes. If you make $100,000 a year after taxes, and then you went out and you spent $110,000, how would you make up for this difference? You could call your rich Uncle Bunty, or if he doesn't have any money to give you, then you might have to go out and get a loan. Now, if you've been following our channel, you know that you should never finance something that you can't afford. And if you haven't been following our channel, why haven't you subscribed yet? America does the exact same thing. When America spends more money than they have to start by calling their rich uncle. America has a rich uncle named Bunty? No, they call Uncle Japan or Uncle China. Prior to this whole economic slowdown starting, America owed $6.4 trillion to other countries, the biggest being Japan and China. Now, if you keep calling up your rich Uncle Bunty every time you spend money, he might get a little annoyed, and sometimes Bunty might run into financial problems himself. This crash has affected countries all over the world. So getting more money from China and Japan might not be very easy right now. The second place the United States can borrow this money from is you and me. I'm not giving the government a penny more than I need to. You might have heard of something called Treasury Bonds. Well, bonds are loans, and Treasury Bonds are loans that regular people give to the government. You give the government money, and in exchange, they pay you with interest. In theory, Treasury Bonds are supposed to be one of the safest investments out there because you are loaning money to the United States government, and we all hope and pray that the government won't collapse. But because the risk is very low, you also get a very low return. Like a 10-year bond will pay you something like 1% a year on your money. So the government will probably get some money from these treasury bonds, but chances are they won't be able to raise all $1 trillion from these bonds. So what's left? Well, the government can call up their best friend, the Federal Reserve Bank, and get their $1 trillion from them. Except the Federal Reserve Bank isn't a real bank. I mean, you and I can't go there and deposit money. It's not a reserve because this Federal Reserve Bank doesn't keep any reserves. And it's not federal. I mean, it even says it on its website that it's not a federal entity. Talk about a deceiving name. So if the Federal Reserve Bank or the Fed doesn't have any money, how do they give money to the government? Through the help of their printer, because the Fed has a special power that allows them to print unlimited amounts of money. So the government can pick up their phone and call up the Fed and say, "What's up, Fed? Fed, can you print me $1 trillion real quick?" And they will be more than happy to do it. That's when the Fed will work with the Treasury Department and they'll walk over to the printer and they'll push a few buttons. Okay, $1 trillion. And then $1 trillion will come out and then they'll give this money to the government and then the government will pay for these bailouts and they will send you your checks. If it's that easy, why can't the government send me checks every day? Well, all this printing money comes at a cost. Wait, I'll pay for the ink. Not that kind of cost. The first and most obvious cost is a higher national debt. Because when the government borrows $1 trillion, whether it be from other countries or bonds or the Fed, they have to pay that money back plus interest. So now the government is just loading up on this debt. That means they have more and higher interest payments to make. And remember, the government gets their money from tax dollars. So that means more of your tax dollars are going to be going to pay off this debt plus interest instead of going to services that could benefit you. That also means that you might see your taxes go up. The second and not so obvious cost is a hidden tax. Let me put it this way. When a crisis happens and the world runs out of toilet paper suddenly becomes very valuable because there's such a low supply of it. But when everybody has an abundant amount of toilet paper and toilet paper is everywhere, toilet paper is not that valuable because, well, everybody has toilet paper. It works the same way with your cash. As more and more cash is printed, the value of our currency, our cash, goes down. That's what inflation is, and that's why the price of everything, your rent, your groceries, your medical bills keep going up because the value of your cash keeps going down. Inflation is called a hidden tax because it makes the majority of people poorer and you don't even see it happen. That's why you need to make sure you're using your checks the right way, otherwise inflation is just gonna make you poorer, and I'm gonna show you how in just a minute. So yeah, we print a ton of money and you get your check and we inject trillions of dollars into the economy and things seem okay for a couple months or so. But you still end up paying the price because you're the one paying for these bailouts for these businesses that made greedy business decisions, and you're the one that's paying the price for your check. First, you have more of your tax dollars going towards debt payments instead of services you'd probably like the government to give you. And second, with the hidden tax of inflation, each dollar that you have saved up is worth a little bit less, so slowly you're gonna start to see the price of everything around you go up. It doesn't happen overnight, but inflation is something that slowly creeps up, which is why you need to use your checks the right way. If you have high interest debt, especially if it's secured debt, you need to get out of that debt as fast as possible and stop the financial bleeding. If you don't have any savings, you need to build a savings cushion as fast as possible. Look, I know that dollars are going to become less valuable because of inflation. I mean, that has always happened. That's always been the case. but the next few months are gonna be a big question mark. So you need to cut your expenses, sell whatever you can, and build up a savings cushion. This way you're protected from going into debt. And third, if you don't have any high interest debt and you have a savings cushion, then you need to use your checks like rich people do. That means don't just save your cash to save it. This cash is just funny money. It's not backed by any sort of tangible asset, and it costs 12 cents to print a $100 bill. You don't want to just hoard cash and have a huge savings account, because your savings and your cash are going to slowly lose value. That's why rich people use their cash and their money to buy assets which grow with inflation. So if inflation happens, you own something that's going to grow in price. This way inflation is benefiting you. That means you want to own assets and investments that grow over time. And right now, the stock market is on sale. Now, before I go any further, let me just remind you, investing has risks. You are never guaranteed to make money when you invest. You might even lose money. Don't blindly listen to a random person on YouTube. So do your due diligence. There's a chance the stock market will come down a lot more. Nobody can predict when the bottom is or how far down we will go. But history has showed us that over the long run, remember, long run, the economy goes up and the stock market will go up too. The key is you want to invest in strong companies for the long term. So if you want to invest in individual companies, you want to invest in a strong company that isn't on the verge or worried about going bankrupt. If you don't know how to analyze companies, then don't just go out and start buying random companies. You can buy what are called index funds. Index funds are funds that just mimic the stock market or a certain group of stocks. Like, you can invest in index funds that go up and down with the S&P 500, which are the 500 biggest and strongest companies in the United States. With an index fund, you don't have to worry about the company you're investing in going bankrupt and losing all your cash, because now if one company in your fund goes belly up, well, the fund will kick out that company and they'll put in a new company. Remember, you don't actually lose money until you sell. So if you're investing for the long term, don't start panic selling. More millionaires are made during recessions than any other time. So I need you to use your money and think like a wealthy person, because this is your opportunity. But the key is you need to have the right mindset, and then you need to take the right action. And if you're looking for an easy way to stay on top of what's happening, this way you can keep your mindset right, we have a free finance and business newsletter that you can subscribe to. Our team first breaks down the top finance and business news, and then we show you how this news affects your wallet. This way you can be smart with your money. If you want to join a free newsletter, you can do that by clicking the link up here or by clicking the link in the description below. Thank you for watching. If you enjoyed this video, share it with one friend. That way we can help spread the word. If you want to learn more about how to start investing in the stock market, I already made a video on it, and you can watch it on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.